Good morning. So we start with DXY like usually. This chart is only chart about fibs that we usually look at. I start usually with the longer term fibs. Now I start with that one. Just wanted to speak about this daily close yesterday. So we stop here. We will see why. That's the level we had called more or less like 2 pips away. What is interesting about yesterday is that this daily close was above the 23.6 of this move up, which is good. But as I said already, I think too many times, we look still for a potential touch to the 91.30 fib, which is at the same time a nice order block here. So that's what I would like. Yesterday we stopped here, which was the higher side of the area we called. The lower side was 91.30. So this area is still interesting to look at. Now, if we look at the bigger fib, so now we are looking at this move, and we see that yesterday we stopped on the 50% of this move. That's the tricky thing with fib sometimes, is that we need to use several fib on different, let's say, size of swing, which means time frame or time period. And here we see that one is interesting here. That was the top of the area, and that was the top too because of other reason that we saw yesterday. We saw not yesterday, but we saw Monday on this chart, which was the chart we post Monday. We were expecting a first bounce in this area. We bounced to the peak there. Then I was expecting to come in this area, perhaps deep to there, but that was the top area with the 200 DMA. We bounced yesterday from it. And at the same time, it's the 50% of this fib. So it's something we need to keep an eye on. If we look at what I will just show that because it's important to remember this this thing. That is what let me put it in always able to be seen. So that is what I posted on Monday. I think I posted this chart. It was this one. So we were expecting a bounce here. We had a bounce here. We were expecting the other option or the other swing low would be in this area. That's where we stopped a little bit early yesterday. So it's tricky. We could come back and go on the bottom of this area. That's still possible. Even if when we look at yesterday price action, when we look at this price action yesterday, if we look at the 4 hours, this is a bullish candle, this is another bullish candle. We had a nice move, but it doesn't mean it's forever. And on the daily, we had a long week on the bottom. So we keep that in mind. Still possible we go there, even if the fact that we close above this 23.6 and yesterday price action to me is bullish. Okay, so we need to be always open-minded. If we look at higher time frame fib, and this one is let me check. Yeah, this one is important because it's the fib that has stopped more or less on the 23.6 here. You see this 23.6 when we stop on the way up. We can move it a little, but that's more or less the 23.6 fib that stopped here like it stopped on the other side. So we stopped here. We came back in the 38.2. We went under the 38.2. That's what I was looking at yesterday. We still closed under it. So on the shorter time frame fib, we are bullish. On this one, we need to break that 81.82, sorry. We need to break up there and close up there to see a continuation in this move. From now, we went down not enough for me. We went down only between the 23.6 and the 50% of this fib. Let me hide that one and this one. So on this short time frame, sorry, on this short time frame, we are bullish. If we look a little bit higher here, we are still inside this move, so we could put it on the other side. It would be the 31.8 if we change if we reverse the dip. That will not change a lot. But so we have this fib, and we need to close above the next one here at 82, and then that one. And if we look a little bit further, you have this big 38.2, and this one is important because it has stopped the price. And the next one that is very important is that one. So that one is very important because it's this one that created to the pip that top on the 76 for fib. So we see here we have a big confluence of several fib, and we need to break above this area. That's a difficult area to break now, and we need to break clearly above the 92. That's simple. As soon as we will be able to break above and close above the 92, probably come back and retest it, then we can run to the next level, which will be here. We have a big confluence again, and which will be then here. And I still think we will see at the end, if we look at the biggest fib, we will see this 94.50 area. So you see too that where we had this blue fib, which is this small move up. Let me hide the small time frame one. That will be easier. I keep this one and I hide that one. So if we look at those two fibs, this one has been acting here as 86 fib, giving this move up. And we are now dealing again, like here we have been doing it, with this big 23.6, 21.4 on this big swing up. All this move down, sorry, on all this swing down. So it's something we need to break. And again, we need to find some momentum for that. So that's why, even if from the money point of view, I would not like to go deeper and reload everything, but finally it could be a good thing because we could find more momentum if we would dip a little bit more to 91.31 area or something like this, and then we would be able to find the traction, as some says, to find the push that we need to go further. So that's what we have from the fib point of view. Here we have the same thing. I said we have a big confluence of fib here on the shorter time frame. We saw it here. We see it here right to the pip, and we have the same thing here, which is the shoulder. You remember the shoulder was the past level we have on the other side, which was that low here, that swing low. So that's where we are. So it's really tricky. I was expecting a deeper pullback to this area, the 91.34, 91.50, still the same as I say, 91.50 to 91.30. The black level are very important in that thing, but we didn't went there. So either we just fly from here, or we can go a little bit lower and find more momentum. That's where we are now. And concerning euro dollar, it's the same thing. We have more or less the same situation, because as we know they are, sorry, I'm looking for my euro dollar chart. So because they are more or less mirror effect. So we went inside, we went through this black trend line, and yesterday that's when we pop here. I was expecting a move up to the 200 DMA and this 2140 fib. We have some black level in that area, and we have all what we need to see a move lower. So we can, we can see I will lock that one. We can see either another move up and come back here. We need to remember that we have here this neckline. This neckline is important if it is valid. It is not valid till we have not finished the move. So the move of this neckline was supposed that's the measurement of this part of the move. We just project it here. Those two are exactly the same. It's a clone of that one. And we put it on the breakpoint. The breakpoint is about here. And that's why we should land there. And we didn't went there yesterday. So it's possible we go there yesterday, or it's possible we just stop there and now we just go lower because that's the area of the 200 DMA of the DXY, as we saw yesterday. This is a 200 DMA of the DXY, and that's why we bounced yesterday from this area. And we even bounced a little bit early. As you saw, we missed it by a few pips. So it's nothing like it's probably 2 or 3 pips on the euro dollar, but we miss it, which means we found here some early buyers of the USD, very early buyers. So it's good in a way because it shows we have people waiting to buy it and they really want to belong USD, especially at this time of the day, which is the New York Open. So at the New York Open, we found some buyers because all the sellers of USD are just turning long now. So we need to keep still the same, open-minded. For me now, I will stay long. So it means I won't risk any short trade because of what I saw yesterday, because of the price action here. For me, this price action is bullish, is really bullish. That what we saw yesterday on the two last 4 hours candle with a very big wick here, followed by this green candle and the close above the 23.6 fib that I just mentioned here, which is that one. So that was bullish. I think we go higher, but I keep in mind that we can still pump in some more momentum. We have no big data to come, so I don't see any catalyzer. I see nothing that could really create a big move. We have later today this GBP set of data. GBP is important, but not as much as euro, of course, now, but it can create some move. Then we have this little USD data, and then nothing, little thing on Friday. So there is no big event that would help us to find some momentum.